Welcome to another weekly Stay Smart newsletter where we talk about what we see transitioning in the news that week, whether that's business travel, corporate housing, relocation, the hospitality industry, the apartment industry, furniture rental, anything that we see that's in the mobility segment, the travel segment, we're going to talk about. If there's something in particular that you want us to talk about, please let us know. We'd be happy to include it in our weekly newsletter. I'm here back in my hometown of Kansas City. I've been traveling quite a bit the last several weeks. Have quite a bit of travel coming over the next couple of months. If there's somewhere you would like to see me host our weekly newsletter at, please let us know. We've had several conversations with our clients recently about what they would like to see us put in this newsletter. And what we've heard is people wanting to talk about availability and cost containment, whether that's hotels, corporate housing. In general, they want to see availability and what's pricing going to look like. Pricing have been up quite a bit. Supply for corporate housing, temporary housing, the apartment industry has been pretty constrained. So we've talked about that quite a bit in some of our newsletter, the apartment industry. And what's interesting about that is that it's very specific to the location that you're looking at. We do talk about as a whole, and this week we'll talk about the single family market, the housing market as a whole, but it's very specific. So it's hard to give concrete information about a certain topic because the rental market in particular, when we look at a market like Austin, RealPage put out some information where 9 of the 13 submarkets in Austin were looking at rent decreases. And that's because a lot of new supply coming online is outpacing the demand in that market. And we've talked a lot about new supply coming online this half of the year and the end of 2024, and that's going to continue. And it's going to hit certain markets more than others. So Austin, Phoenix, we're seeing those markets look at some rental decreases. But we talked this week about New York, the rental market in New York, and how they're looking at record high rents. In June, in particular, the median rental listing in Manhattan was almost $4,400 a month. So all those markets in New York doing really well. Again, that having a lot to do with supply versus demand, and that's the way the market works. So we'll continue to talk about how certain markets are working and try to give you an overview at the same time. But you got to remember the overview doesn't get as granular as we'd like to see. And even when you look at like a market like Austin, 9 of the 13 markets seeing rent increases. There are still 4 markets that are not decreasing. So it depends on how granular you want to get at. So really good information about New York. There's definitely markets that we've seen here in the Midwest still do well in the apartment industry. So that corporate housing, temp housing segment also maybe struggling a little bit with availability here in the summer, trying to find a 3-bedroom apartment. It's really hard. Also still seeing those rent increases in the Midwest and the Northeast. So your corporate housing providers are still probably passing those along. The housing market, we talk about the resiliency of the housing market. There's 2 or 3 articles here that we talk about how well the housing market is doing. And really what we're talking about, new construction's way up. Prices are up almost to their peak of last year, I think 0.9% below the peak of June of 2022. And I think that's good information. It's good to see that market doing so well, even with the lack of existing home inventory and the elevated cost of mortgages. And so one of the articles talks in particular about new construction versus existing inventory. And that's because people are staying in their homes because the cost of those mortgages. If they're sitting on a 2 or 3% mortgage right now, selling and buying into a 6 or probably closer to 7% mortgage is just cost prohibitive. So they're staying in their homes. So resiliency of the housing market in spite of, a low supply of existing inventory and the cost of mortgages. So it's good to see. I think new construction in particular in the single family market's good for the economy. Construction's good for the economy. Keeping people at work is good. So I think that's some good information. I think that housing recession is behind us. So take a look at those articles. Really good information. And then we talk about Lynn Shotwell, president of Worldwide ERC. She put her farewell letter in the Mobility magazine. a couple weeks ago. Lynn was the president, started in March of 2020, right when the pandemic was hitting, right when relocation was coming somewhat to a halt. She's led that industry for the last 3+ years. She's done an amazing job. One of the accomplishments that she talks about is the Coalition for Greener Mobility, along with 5 other mobility organizations, creating a framework for a more sustainable mobility industry. And I think that's going to be her lasting legacy. So thank you, Lynn, for your time, and best of luck with your future endeavors. And lastly, I want to mention one thing. We talk a lot, we put a lot of information out there. We try to make it as relevant as possible and as factual as possible. We do our research. And so far, it appears what we're putting out there has been helpful. But there has been a little in the kind of Airbnb segment. There was a tweet put out at the end of June by a Nick Gurley, and kind of created somewhat of a firestorm because he had tweeted some data that came from All Rooms, an aggregator data site for the short-term rental space. So Nick had put out a tweet about the collapse of Airbnb, as he was showing the revenue per available listing dropping 40% over 40% in markets like Phoenix and Austin, some markets that we've talked about. And to come to find out, Skift Travel put out information in the last week about how that was just wrong. The information was just not factual. I think he tried his best to put that information out there, but it was just wrong. They had quoted AirDNA saying that to some extent those markets are down, probably closer to 3 to 4% revenue or revenue per available listing, which is a metric that the short-term rental space uses, similar to the RevPAR metric in the hotel industry. So that being down 3 to 4% versus 40 to 50% that Nick had put out. So kind of caused a firestorm. And I think when you see stuff like that, sometimes you kind of have to dig into it and be like, is this really factual? We're going to try to do our best to put out factual information. If there is something that we put out that's maybe somewhat inaccurate, we'll definitely come out and say, hey, this wasn't accurate. We'll make a correction to that. But we're doing our best to give you information that we think is going to be useful for you. If there's information that you want to see in any of these industries, or if there's anything that we can help you with, whether it's corporate housing, relocation, travel industry, if you need input on that, a resource to bounce ideas off or talk about, we're here for you. Again, I'm based here in Kansas City. We can help you anywhere in the Midwest for temp housing services, really anywhere in the U.S. But if you want advice on anything in the relocation industry, corporate housing industry, I'm sure I can give you some input on that. So definitely reach out to us. And that's what I see transitioning this week. Take care, everyone.